especially when I talk about stock markets, I think people behave very badly. The success secret of stock market, 99% of the time is behavior, only 1% is intelligence.
Okay, somebody's asked, what are the risks involved in investing?
I think the biggest risk is you yourself. I think when it comes to investing, if you are not investing in the right places, especially when I talk about stock markets, I think people behave very badly. The success secret of stock market, 99% of the time is behavior, only 1% is intelligence, right? What to buy, how much to buy, at what prices to buy. That is intelligence. That is only 1%. 99% is behavior, and that behavior is largely dependent on how much time you have. Right. If you have a long period of time, you will not be impatient. You would rather want to buy a high quality business and high quality mutual funds and keep on investing for a long period of time. So I think the biggest risk is you. Another big risk to your investment framework is, as I mentioned, borrowing a lot of money. A lot of people, after they earn some kind of return in investing, they borrow money to invest. Please don't borrow money to invest. Please invest only on your own money. So your own money, invest for a long period of time. I think that's it.
That's it.
Nothing else. Nothing else.
Okay.
It's like there's a term called coffee can investing. So yeah. In olden days, you had coffee cans made of tins, and our grandmothers used to save some currency, some notes over there, some gold coins as well, and just forget about it. And after 20 years, when you open that can, the value is huge because gradually you have saved some amount of money in coffee can. So approach that's investing with a very simple mindset. Be sensible. Of course, our brains are not wired to make ourselves sensible investors. We decide a lot of things based on reflexes rather than on reflection. So reflect a bit, think about what will happen if you don't invest.
I'm still absorbing that reflexes versus reflection.
It's a very important concept. That's how our brains work. So reflexes are not bad because if you go back to say when our forefathers were roaming the jungles and they heard some sound behind the bushes, they couldn't have reflected. They had to reflexively just run away, and that's the reason we are here today, right? So reflexes really work in real life, but when it comes to investing your money, be reflective. Think what you're doing. It's your hard-earned money.
How are FDs
as investment
any other options?
So fixed deposits are good for people who don't want to risk their money on stock markets. Of course, if you, as again coming back to the point, if you have money which you don't need the next 5 years, FDs are bigger risk. Why FDs are bigger risk? Because the maximum rate of return that you can earn in FD is say 7, 8 or 9% rate of return. When you have inflation in the economy, which is prices moving up every year, when it is rising at 12 to 15% every year and your return is less than that, you're actually earning a negative rate of return. Right. So in the long term, your FD is risky. In the short term, when you want to keep that money safe for a financial need that is coming up in the next 3 to 5 years, you put some part of your money in FD, but long term, go to equities.
Okay. And one question that's actually come in is suggestions for stock market investments. I'm sure this was coming.
I don't really talk about individual stocks, but if you really want to get into stocks, I think look at businesses which you understand. Look at simple businesses. So just to give an example, when my daughter was 11 years of age, 3 years back, I drew a household. I drew a living room. And I listed down all the companies which were there in the living room. So there were air conditioner companies, there were paint companies, there were footwear, there were toys, there were stationery, there were retail. The father is thinking about a car, so there's a car company, there's a tire company, there's a jewelry company, there's a food company, there's media companies. There's so many businesses out there which are simple to understand, which we interact with on a daily basis. So go out, find out which kind of businesses you really understand, and whether they have done really well in the past and whether they have a good future, 10 years, probably 10 to 15 years down the line. Then you need to do some basic math. You need to find out whether the stock price is reasonably attractive. Now that's a discussion for another day. But if you can do all that work, you can still go and pick some good quality stocks. So as an example, what we did 3 years back is I asked my daughter to pick up 10 businesses from that list, assuming those were 10 stocks that she picked up. And over the previous 3 years, that portfolio has given 80% rate of return compared to the stock market, which is a census which gave around a 40% rate of return. So that portfolio has beaten the index as well. But that doesn't mean that my daughter has become a sensible investor. It's purely luck. 3 years is purely luck. But the idea is that investing can be made very simple. You have to do things which you understand. The moment you move outside your circle of competence, you are going to fall flat on your face.
How have investment patterns changed between two generations, and what has surprised you?
Okay, so I think participants have changed. Nothing else has changed. Patterns have not changed. Behavior has not changed.
Somebody's asked, in your experience, what qualities does one require to be an investor?
You have to be painfully patient. I think it's actually painful to be patient, because try driving on a street in Bombay and you know that you are not patient. If you can practice patience, I think that can take you through every thick and thin. I remember of this test called the marshmallow test, which was done in the US by a scientist that died recently. And the idea was to put kids of 5 years, 4 years, 6 years of age in a room with a single piece of marshmallow. And the task was that if you don't eat the marshmallow in the 15 minutes, then the teacher is out of the classroom, you will get another marshmallow, and then you can eat both of them. So most of the kids could not resist that, because marshmallow is like, you have to eat it, you cannot really wait. Who bothers about the future, even if it's 15 minutes later? And when they tracked the lives of kids, of those kids, they really found out, and there's a book called the Marshmallow Test. They found out that the kids who actually did not eat the marshmallow succeeded in life, and the guys who actually ate the marshmallow because they could not resist it, they did not have the patience of waiting for 15 minutes, actually did not do really well.
Right.
So patience is something which I advise to everyone, to my kids, to my 20-year-old self as well. Wish I could have been more patient.
And that actually follows to our next question, which is, somebody's asked that if you lose money, how do you deal with it? With loss or failure, how do you deal with it?
So I think I don't see there are any failures, there are only lessons. So there are no mistakes, there are only lessons that you can take from that. So when I probably, if I understand the question right, he's or she's talking about losing money in the stock market.
Yes.
Right, so if your stock is down, say 20-30%, that is not losing money. But if your stock falls and does not recover at all, that is losing money. Financial advisors or insurance agents are always going to, or mostly going to sell you insurance plus investment together. Avoid that. Keep insurance and investment separate, because otherwise you're going to lose your money permanently. That's permanent loss of capital.
Right, so I know Randy Zuckerberg said this very interesting thing, that out of these 5 things, you have to prioritize only 3, which is work, family, health, sleep, and friends stroke entertainment. Right? I'm adding the entertainment now because with the Netflix generation, because friends have been substituted by on-demand television. But you will be at any point in time be able to prioritize only these 3. So we leave our readers with that thought, our listeners and everybody who's watching with a thought of what are the 3 that you want to prioritize. And of course, if you have any questions, please feel free to tweet to Vishal or us, and we're happy to take them.
Sure.
And Vishal, thank you so much.
No, thank you for having me on this thing.
For more recipes, conversation, DIYs for kids, don't forget to subscribe to our channel and hit the bell icon so you never miss a video from Kidsstoppress.com.